When representing a buyer or a seller, should we as a general rule be asking assumable mortgages and PMM, seller financing as a possibility/option? Ever since, I think the 90s, there haven't been very many assumable mortgages, guys. So the mortgages that have been originated in the last 10, 20 years are pretty much non-assumable. Percentage-wise, maybe 2%, 1%. So the chances of that happening are very slim. If a lender has a mortgage that's at 3% and rates are at 6%, and it is somehow assumable, I'm going to tell you that your very qualified buyer is going to get run through a gamut of hoops that they're going to have to do, and it'll probably be delayed by 3 or 6 months or a year because they will have staffing issues. So in other words, what I'm telling you is that 3% assumable loan, even if it were assumable, is not going to be assumable because the bank's going to slow it down. When loans were assumable, they had an issue with people assuming loans that weren't on there originally, and there was all kinds of defaults and bullshit, kind of like in 2008. So assumable loans kind of went by the wayside a little bit. Now let's go with the second fact, guys. If there is an assumable mortgage and you have a 60-day escrow, who's the loan officer assigned to that assumable mortgage? There isn't one. It gets stuck on someone's desk, guys. And it's kind of like sending a loan to First Hawaiian Bank. Well, First Hawaiian Bank won't accept a loan that's coming to them the day it's being submitted if it doesn't have a closing date of at least 60 days on it. So we used to have to change the purchase and sale agreement. So what I'm trying to say is you have an assumable loan, but escrow needs to close. People need to move. People want their money, all the stuff. You're going to run into a logistics nightmare in that bank's assumable loan department. And I can assure you, they are not going to beef up staff in that department. They're not, because they don't make any money off these things when they're assumable like that. Matter of fact, they want people to pay off that 3% mortgage. Purchase money mortgages. Purchase money mortgages is a really good question. This one you guys should be asking. If you're a buyer agent and you see something that's slightly overpriced, then you can look on the TMK and you can see that it's owned free and clear. Ask the seller's agent, are they willing to do a purchase money mortgage? If they are, you guys can make some really favorable financing. Purchase money mortgages are definitely a good idea if the people own the property free and clear, they want their price, and they have no motivation. They're not. Also, if you're selling a place for $2.7 million and someone just puts down 10% and your cost basis into it was $1 million, you're not going to be paying any income taxes on it because you're not receiving very much money. So you actually have a higher sales price and you have an interest rate based on that high sales price, and you didn't have to pay income tax. So there are kind of win-win scenarios for that.
Buy or sell Maui Real Estate, Romvari Realty.